Okay. Good evening, students. Welcome to the session. So what we are going to do in these 5 sessions on the direct tax is we are going to have this particular class is dedicated towards the updates, which is going to be more on the statutory updates and the judicial updates that we are going to discuss for your examination. And for the coming 4 lectures, what we are going to do is we are going to solve a lot of practical questions. Yes, good evening, Viraj. How are you doing? So, what we're going to do is we are going to solve many practical questions. So today it's going to be more listening for you. But from the next class onwards, what I would suggest you is try revising the topic before you sit for the next class, because the purpose of these classes would be to have a kind of revision as well as problem solving for you. So I would suggest start revising your PGBP chapter maybe tonight, tomorrow, so that before the next class, day after, you are ready with that. Because what I'll be doing is in the coming class, I would be solving more questions on the PGBP front. So have a thorough revision so that you are able to have the answers. It's not that I'm going to explain you the topics. It's more like we will be doing the practical problem solving. Fine? Okay. Yes. Good evening, Chitala. Okay. So let's get started with this class. So here we are going to discuss the statutory and judicial updates. Fine. Okay. So the first we will start with the judicial updates, and then because the statutory updates are not that much. So first what we'll do is we'll start with the judicial updates only, and then we will discuss at the end the statutory updates. In the meantime, if you have any questions, you can drop in the chat box and I will solve your question as and when I see to it, and then we'll solve all the doubts whatever you have. So now let's start with the case laws. The very first case is in the context of section 37. The very first case is in the context of section 37. Now, again, for the case laws, what I would want you to do is give me the answers, okay? I'm going to put forth you a lot of questions. Don't just try to listen to what I'm saying. Start giving me the answers, because the entire objective of this series is to have a kind of a revision for you, right? So the more you would participate, the more you would learn. Now, I'll be asking you the first question. What is section 37? What does it allow? What does it relate to? Please be very quick in giving the answers. Section 37, what is it? Yes. What is allowed? What is disallowed under section 37? Yes, students, please be very quick. Yes, Janvi, it's expenses for PGBP, but what kind of expenses is it? Please be very fast. Yes, what kind of expenses? All expenses are allowed, Janvi. What is section 37 saying? Because see, when you know the section, you would be, able to understand the case law better. So please tell me, what are the expenses? Go back to your books and look and see. I don't want immediate answer, but yes, tell me what is it exactly. Yes, please fast. What expenses? Yes, Janvi. Revenue expenditure. Okay. Yes, revenue expenditure. But aren't there any some conditions in relation to that? Okay. Let me give you what the section 37 talks about before we get into the case law, because as I said, you would be able to understand the case only when you are very thorough with the section itself, because otherwise how will you understand what was the point of litigation, right? Okay, and that's how you will even remember for your exam, because otherwise just remembering the facts and all, it will not really help. Okay, so section 37, which is there, is the general deduction. Section 37, which is there, is the general deduction of expense. So as you know, we have section 30 to 36 onward, right? So 30 is for your repairs, 30 and 31 is for your repairs of building, plant and machinery, furniture, all of that, right? And then 32, you have a specific section on allowance of the depreciation and additional depreciation, right? 33 onwards, you have certain specific deductions in relation to the specific businesses, right? So 36 gives you the disallowances as to what are the expenditure allowed, what are the expenditure disallowed. There are specific expenditure like interest, bed debts, and all of that. 37 is whatever is not falling within 30 to 36. So this is a general deduction of expense, which is not falling under 30 to 36, right? And which is not a capital expenditure. So as you rightly said, Janvi, it's the revenue expense. So revenue and not the capital expenditure. Even not the personal expense, because this revenue expense should be wholly and exclusively for the purpose of the business or profession. So only and exclusively for the purpose of business and profession, meaning no personal expense, right? So the expenditure which is not covered in the 30 to 36, which is a revenue in nature and which is for wholly, which is expended or laid out wholly and exclusively for the purpose of business or profession, will be allowed as deduction. Janvi, rent paid, repair made, insurance is under 31. You don't need to go to 37 for that. Yes, Chitala, you can do that. You can watch this and then again you can, come back for the May 24 attempt as well, where the fresh lectures would be available. Till then you can, start, because the base is going to remain the same. Of course, the amendments will be carried out, which of course you can attend for your own attempt, but the base is going to remain the same. So you can continue attending the lectures, okay? Now there are certain preconditions or certain terms and conditions for 37. The first explanation 1, the first condition or the first terms and condition is that any expenditure which is incurred by the assessee for the offense or for any particular matter which is prohibited by the law will not be considered to be incurred for the purpose of business or profession. What does the first explanation say? So the main provision says that any expenditure incurred wholly and exclusively for the business will be allowed as deduction under 37. But wait, the explanation 1 is saying that any expenditure which is for the purpose of offense or for any matter which is prohibited by the law will not be considered or will be deemed to be not have been incurred for the business or profession. Are we getting this particular point? So, explanation 1 says, any expenditure for offense or any expenditure which is incurred for any offense or for any purpose which is prohibited by the law shall not be deemed to have been incurred for the purpose of business or profession, and no deduction shall be allowed. Are we getting this point? Right? So why I'm writing these points? Because when the analysis of the judgment needs to be given at the time of your exam, you're supposed to write the provision applicable when you are giving the analysis. So when you read the judgments also, have you read the copy of the judgment ever? Anybody has ever seen how the judgments are written? Have you taken any judgment and gone through that? Yes? Have you done that ever before? Anybody please mention in the chat box. You would see how the judges, or for that matter, the counsels also argue the case based on the provision applicable. They first show what is the provision saying before arguing on anything, right? So you, as a CA, when you would be qualified, you need to know basically what is the provision. So be strong with the provision before you get into any case law. Are we clear? Yes, Priyanka, it's more oriented for the practical questions and the practice. Yes, it will be conducted, Sriram. Okay, yes. So now what was this case? Now this case was a Supreme Court judgment in the case of Apex Laboratories Private Limited. This is the Supreme Court judgment. Now, what was the question before the Supreme Court? So see what happens. You want to market certain things, right? Everybody wants to market. Without that, the business is not going to function, isn't it? You have to market, I have to market, everybody needs to market for the business to be run. And the same thing happens in the case of the pharmaceutical companies. So these pharmaceutical companies, how would they run their business? Okay, what they generally do is they would go to the doctors and give their medicines for free, right? So they would just give these medicines for free to the doctors, and then they would ask the doctors to recommend these medicines to their patients. So that's how the medicines will basically work. Otherwise, how the doctor will come to know there is a new medicine from Cipla, there is a new medicine from Glenmark. So what they generally try to do is they try to give these free medicines first to the medical practitioners so that they could, suggest to their patients that these medicines they should be taking up. But what is the downside of that? If pharmaceutical companies start doing that, and if the doctors or the medical practitioners start accepting these particular, gifts or the freebies, what will happen? The doctors may start recommending the wrong medicines to the patients, isn't it? So we have the professional ethics which guide our conduct of we as chartered accountant, right? We have the professional ethics, right? You study as a part of audit. Similarly, the Indian Medical Council, like ICI, governs the professional conduct for us. The Indian Medical Council issues the professional conduct, etiquette, and ethics regulations for the medical practitioners and clearly prohibits accepting any gifts or freebies or any facilities from anyone. And it says that in case the medical practitioners are found to be taking any gifts, then the action or the sanctions can be taken against the medical practitioner for violation of the conduct. So, acceptance of freebies by the pharmaceutical companies is clearly in contravention to the guidelines or to the regulations issued by the Indian Medical Council. Right? Now, what is the issue that you are seeing over here? I told you the facts. Now here, the pharmaceutical company, this Apex Laboratory, had incurred the expenses of giving the freebies to the medical practitioners and giving certain incentives to them. What is the issue that you're identifying over here? Yes, anyone? What is the problem that the pharmaceutical companies are giving? So see, the acceptance by the medical practitioners is an offense in their guidelines, in their regulations. But giving of the freebies to the medical practitioners is nowhere an offense. Are you understanding? The pharmaceutical company giving freebies is nowhere an offense. The acceptance of the freebies by the medical practitioners is an offense for the medical practitioners. So why the deduction should be disallowed to the pharmaceutical company? It's not a legal expense. No, Janvi, we don't need it to be a legal expense. Why do you need it to be a legal expense? Yes. What is the problem? Yes, anybody can identify the problem for me. It is not allowed by law. But isn't it, yes, Shagvi, but isn't it the case that it's not allowed by law for the medical practitioners? For the giver, it is allowed. Then why? So you are looking at the deduction of the pharmaceutical company, right? You're not looking at the income of the medical professional. So then, I mean, deduction is technically not, illegal for the pharmaceutical company. Samples and freebies are disallowed as per income tax. Chitala, where is it written? It's not mentioned anywhere that the samples and the freebies are disallowed. Where do you get that from? Yes. Okay. So the taxpayer also raised a similar argument that we as a pharmaceutical company are nowhere prohibited from giving these freebies. The acceptance by the medical practitioner is prohibited. So the CBDT had also issued the circular in 2012, clarifying that any expense which is incurred by the pharmaceutical company in providing any incentives which is in violation of the Indian Medical Council regulation will be considered as an inadmissible expenditure in the hands of the pharmaceutical company. So this will be considered as the inadmissible expenditure in the hands of the pharmaceutical company, and the corresponding income would be taxed in the hands of the medical practitioner. Now the matter went before the Supreme Court because this was a CBDT circular. The CBDT circular is not binding on the taxpayer. It is binding on the revenue officer. It is not binding on the taxpayer. Is CBDT circular binding on the taxpayer? The answer is no. So the taxpayer is not bound by the CBDT circular. Right? So therefore, in that particular case, the taxpayers were really not following it. Right? So the CBDT circulars are really not binding on the taxpayer. These are binding on the income tax authorities. Now the matter, as I said, reached before the Supreme Court, and the Supreme Court observed that acceptance of the freebies is prohibited by the Indian Medical Council regulation. And there are fines if the doctors accept it. So, even if the pharmaceutical companies are contending that they themselves are not engaging in any illegal activity. So pharmaceutical companies, though they are contending that they directly are not committing any offense, as there is no, penal provision or no prohibitory provision for the pharmaceutical companies in the Indian Medical Council guidelines. But since these pharmaceutical companies are extending the freebies to the medical professionals for whom this is a punishable offense, if the expense is allowed to the pharmaceutical companies, then this is a kind of way to say that, okay, you give this particular freebie, even though for the recipient, this is not allowed to be accepted. So in a way, we are enabling the commission of the offense, which is attracting a penalty. If we allow this deduction to the pharmaceutical company, then it is a way of saying that, okay, we are enabling you to commit this offense all the more. Right? So therefore, the incentives given by the pharmacy company has the result of exposing the medical professionals to the sanctions or the penalties, also leading to the ban on their practice of medicine. So the contention of the pharmaceutical company that only the recipient is prohibited, that is not the correct contention. So though the medical practitioners are forbidden from accepting such gifts, but giving these particular freebies was also not less than a prohibition. So if acceptance is a prohibition, even the giver is also prohibited. And therefore, the deduction will not be allowed to the taxpayer, which are the pharmaceutical companies. Are we clear? Any doubt? Did you understand this case? Yes, Janvi, the income tax will be leviable in that particular case. Okay. Are we clear about this judgment? So can we just write it down over here? So the facts are clear, or I'll put it out the facts also for you. Or I'll just put the question. Rather the facts, I'll put the issue. What is the issue? The issue is the expenses incurred by pharmaceutical companies on incentives given to medical professionals whether allowed as deduction under section 37. So first, this is the issue you will identify when you will write for your exam. Then you will write the provision applicable. So this is what we have already written over here. Then you will write the analysis of the Supreme Court ruling. What does the Supreme Court ruling says? So Supreme Court ruling says, number one, that contention of pharmaceutical companies that they are not directly prohibited under the Indian Medical Council regulations needs to be rejected. Needs to be rejected. Right? If the acceptance of freebies is prohibited under the Indian Medical Council regulation. I'm writing the short form over here, IMCR. Then the pharmaceutical companies cannot be granted the tax benefit of providing such freebies. As that shall result in enabling the commission of the act. Enabling the commission of the act. Are we clear? So even if pharmacy companies are not directly prohibited from giving incentives, but this has result of exposing, right? So therefore, the pharmaceutical companies giving freebies, the pharmacy companies giving freebies is prohibited by law, and therefore will not be allowed as deduction. Are we clear? Yes or no? Yes, are you clear about this? Yes or no? Past? Okay? Okay. Now, this was the Supreme Court ruling. Now, in order to clearly provide this even as a part of the Income Tax Act, the amendment has been carried out by way of inserting an explanation to Section 37. So another explanation 1 was already providing that any expense for offense or any purpose which is prohibited by law will not be allowed as deduction. Now, explanation 3 all the more clarifies this point. Explanation 3 says that any expenditure What do we understand by the any expenditure incurred for any purpose which is an offense or prohibited by law? So explanation 3 is giving the meaning of explanation 1. It says that expenditure which is incurred for any offense or for any purpose which is prohibited by law shall include the expenditure to provide any benefit or perquisite to any other person, and if the acceptance of such benefit by the other person is in violation of any rule or guideline governing the conduct of such person. So therefore, explanation 3 says that the explanation 1 shall include expenditure, the explanation 1 or the expenditure incurred which is for an offense or purpose prohibited by law will include the expense to provide any benefit or perquisite to any person and acceptance of such benefit or perquisite is in violation of law or rules governing conduct of such person. Yes or no? Clear? Yes, please tell me. Yes, past. Are we clear about this? Yes. No, Janvi. The direct purchase from medicine shop is not a benefit, right? Because here it's not giving for free. So here when the pharmaceutical companies are giving it for free, that is where the problem is arising. Are you getting that? Okay. Shall we proceed on to the next case then? Okay. Now the next case is about the chapter 6A deduction in relation to the profit linked deductions. Profit linked deduction. Now what is this particular deduction? I'll tell you. So all of you know section 80IA. What does 80IA provide for? What is section 80IA? Yes. Again, you need to revise and get back to me what is 80IA for. Yes, students. No, Janvi, free of cost, yes, if it is given to a patient, then that's a different story. But yeah, if it is given to a doctor, then that will be included for sure. Yes, what is 80IA? Yes, past. What is 80IA? And how much is the deduction which is allowed in 80IA? No, it's not a deduction for employment, Janvi. Go back to the module and let me know what is 80IA. Yes. What is ATIA and how much is the deduction? Faster, please check the module and let me know. All of you, please go back to module. What is ATI and how much is the deduction? Let me know. Faster? Yes. Correct, Janvi. Infrastructure, power, telecommunication sector, 100% of the profit is allowed as deduction. Yes. So 100% of the profit and gains is allowed as deduction in the case of developing and maintaining any infrastructure facility, power undertakings, all of that. Okay, industrial parks. For 10 years period, this particular deduction is being allowed. Now, let me tell you one of the issues of what the section ATIA talks about. Let's discuss about ATIA in detail. So see, ATIA gives you the profit linked deduction. ATIA gives you the profit linked deduction. Now in the profit linked deduction, what happens is that the assessee who is carrying on the particular, let's say, developing or maintaining the infra facility, the 100% of profit which is derived from this particular activity are allowed as the deduction for the 10 years period out of the 20 AYs. Right? Now, the issue which arises in this particular case is that whether the profits which are there, how the deduction for that profit is to be computed. So there is a deeming fiction under ATIA and under ATA, which is governing the deduction, Chapter 6A deduction provision. So in computing the eligible business, the profit, there is a deeming fiction that this eligible business shall be considered as the only business of the assessee. This eligible business shall be considered as the only business of the assessee. What do we understand by that? Let's try and understand. For that, I'm giving you what section ATIA talks about. So ATIA 1, which is there, it provides that where ATIA 1 provides that where the gross total income, your GTI, includes, where the gross total income includes any profits and gains derived by the undertaking or enterprise from any specified business or the eligible business. So includes profits and gains derived from eligible business. Then the deduction will be allowed 100% of the profits and gains derived. So what is the deduction allowed? 100% of the profits and gains derived from the eligible business. Derived from the eligible business. Deduction will be allowed from the total income. From the total income. Right? So this is what your ATIA1 provides. Then ATIA5. ATIA5, this is ATIA1 and then ATIA5 provides that the profits and gains of the eligible business for the purpose of computing or for the purpose of determining the quantum of deduction, for determining the quantum of deduction, for the purpose of determining the quantum of deduction, for the purpose of determining the quantum of deduction, it will be considered that the eligible business, the deduction will be computed as if the eligible business is the only source of income of the assessee during the previous year. So for the purpose of determining the quantum of the business deduction, it will be considered that, or it will be computed as if the eligible business is the only source of income of the assessee. We'll try and understand the meaning of this. We'll try and understand the meaning of this particular point. Do not worry. Then we have section 80A. So the deductions are provided under chapter 6A, and the first section which is there is the 80A. What does 88? 88 talks about how the deduction needs to be claimed. So what does 80A say is that in computing the total income, the deductions will be allowed from the gross total income. So how do you make the computation? You make the format, right? How do you make the computation? You say that the gross total income minus the deduction under chapter 6A. And then you get the total income. Right? This is how you write. This is how you present. So this presentation comes from 80A. That the total income shall be computed after allowing the deductions under chapter 6A from the gross total income. And 88.2 says that the chapter 6A deduction shall not exceed gross total income. Obviously, you cannot claim a loss if you have deductions more. So your chapter 6A deduction will be restricted to the gross total income. Now, why we are coming over here, you'll understand in a while. But just understand these provisions. Now, 80AB, another section. 80AB. 80A is generally talking about how the deduction is to be considered. 80AB is in relation to the profit linked deductions, how the profit linked deductions are to be considered. What does 80AB talks about? 80AB says simple thing, that where any deductions are claimed which are in relation to the profits included in the gross total income. See, under chapter 6A deduction, you have the deductions in relation to the expenditure also. You have the deduction in relation to the income also. Expenditure related deduction like your LIC, tuition fee, ATC, ATD, all of that, right? The income related deduction is that where you have included the income and that is allowed as a deduction. So 80AB is talking about the income profit linked deduction, deduction in respect of the income. So it says that where any deduction is claimed or allowed under the chapter 6A in relation to the incomes. In respect of the income which is included in the gross total income. Then while computing the deduction, the income which is there shall be deemed to be the income which is derived or received by the assessee and which is included in the gross total income. What does 80AB says? 80AB says that for the purpose of allowing the deduction under chapter 6A in respect of the income which is included in the total income, in the gross total income. Then while computing the deduction, the amount of the income which is computed as per the provisions of the Act shall alone be deemed to be the amount of income which is derived or received by the assessee. Which is derived or received by the assessee. So what does it say? While computing deduction against the income included in gross total income, the income shall alone be deemed to be the income. The eligible income shall alone be deemed to be income. Shall alone be deemed to be the income. Now, what is the issue? I'll tell you what is the issue. So, the issue is in respect of whether the chapter 6A deduction, which are in relation to the profits, the profit linked deduction under chapter 6A, have to be restricted only to the income which is included in PGBP, or can it be extended beyond? Now, let me give you an example. Let's say there's an Indian company. Now, let's say it has profits from eligible business. Profits from eligible business, let's say rupees 90 lakhs. There is a loss from non-eligible business. Let's say 20 lakhs. So what will be your income under the head PGBP? Income under the head PGBP will be 70 lakhs, right? Right? It will be 70 lakh. And let's say my other income is there. Let's say I have interest income and all of that. Other income is there. Let's say 15 lakh. So my gross total income is 85 lakhs. Now the question here is whether my deduction under 80IP, under 80I should be 70 lakh or 85 lakh. Should be 70 lakh or 85 lakh. Yes. Now you have to read all these provisions what I told you. 80IA1, 80IA5, 80A, 80AB, and tell me what should be the deduction. Read the provision properly, take 2 minutes time, and then answer. Charan, all the earlier notes of May 23 are already uploaded. Yes, what will be the deduction? You have to think about and tell me the answer. Think about it, Janvi, properly. Hi, Kaushiki, no problem. Yes, give me the answer. Yes, Charan. Answers, please, fast. Look at the provision and tell me. Janvi, do you want to revisit 90 lakhs or do you want to stick around that? I'm telling you 90 lakhs is not the correct answer upfront. Okay, let me explain. Now, this is the entire controversy around whether it should be restricted to 70 lakhs or whether it should be restricted to, or whether we can also claim 85. 90 is not the correct answer. Janvi, what does 80A says? ATA says that the deduction cannot exceed the gross total income. My gross total income is 85 lakh. How can I claim the deduction of 90 lakh? I cannot claim. My deduction cannot exceed 90 lakhs. 85 lakh. So 90 lakh cannot be the answer. That's very clear. The only concern now arises whether I can claim 75 or whether I should be claiming 70 or 85. So this was the question before the Supreme Court of India in the case of Reliance Energy Limited. What is the Supreme Court ruling saying? So, in that case also, there was this similar contention. The assessee had claimed the deduction of 85 lakh. And the AO denied that particular deduction. The AO denied the deduction because the AO held that 80AB of the Act, Section 80AB, makes it very clear that for the purpose of the deduction in respect of the income, deduction had to be given on the income which is the eligible income. And the deduction has to be allowed against that income only. And the deduction has to be allowed against that income only. Right? So the contention of the AO was that 80AB of the Act clearly provides that the deduction has to be allowed only against the that income and not including the income from other sources also. So the AO did not accept the assessee's calculation, which was deduction against the entire gross total income. He rejected the claim of the assessee and restricted the deduction to only the PGBP income, only the business income. So AO's contention was what? That the deduction under 80IA pertains to only profit and gains from a business undertaking. So the deduction is allowable only against income from the business. What you are claiming 80IA for? You are claiming 80IA for only against the income from business. So the AO's contention was that the 80IA cannot be allowed against any other source other than the business for which under which the infrastructure project is being done. So the AO said that the 80AB is also very clear that only eligible income shall be allowed. But the assessee argued before the Supreme Court that the conclusion of the AO is not correct. The assessee's contention was based on the observation that the AO, what is contending that the deduction is permissible only against the particular income is not correct. The assessee appealed the court that the deduction have to be aggregated and allowed against the gross total income. And it should not be only restricted to the business income. And what 80AB is trying to say is, 80AB is not trying to restrict the 80IA. 80AB is just giving how the deduction has to be computed. 80AB is not restricting. 80AB is just saying that how the deduction has to be computed by considering that only this is the income against which it should be allowed. So The matter then reached the Supreme Court. Because the assessee or the revenue was not happy with the conclusion of the High Court. Are we clear? Now, what was the contention of the revenue before the Supreme Court? That the assessing officer was right in holding that the deduction under 80IA should be restricted to business income only. And 80AB also contemplates deduction in respect of the eligible income. Further, if you look at 80IA 5, it also makes it clear that the deduction or the determination of the deduction, of the quantum of deduction, should be on the basis that the source of income from the eligible business is the only source of income, and therefore a deduction has to be only against the business income. So if you read 80IA, it says income derived from the eligible business, which indicates that the computation of deduction has to be restricted only to the profits and gains from eligible business. However, the assessee's argument was what? That 80AB is only referring to the computation of deduction, and there is no indication even under 80IA 5 that the deduction is restricted only to business income. The assessee's contention was, the assessee council's contention was what? That 80IA 5 deals with the determination of the quantum of deduction by treating the eligible business as the only source of income of the assessee. And 80IA 5, 80A is only concerned with the computation of deduction. What is the deduction which is to be allowed? It is not restricting only to business income. So what they are trying to say is, the assessee is trying to say that, what is my quantum of deduction? For that purpose, you look at 80IA 5 and 80A. And once you have decided the quantum of deduction, only then you will decide about the allowability of deduction. So 80IA is not restricting, 80IA 5 is not saying that you only restrict to the business income. It is saying that how do you compute the deduction? In this case, my deduction is 90. Or after I set off my profit, I do not need to see the set off. I do not need to set off the losses first. I need to see what is my income. I do not need to set off the non-eligible business losses against the profits of the eligible business. I don't need to do that. First, I have to decide what is my deduction. For that, I will go to 80IA 5. This is what the assessee is arguing. Assessee is saying, are you understanding? Assessee is saying that 80IA 5, look at it. What does it say? That for the determining the quantum of deduction, you consider that the eligible business is the only source of income of the assessee. Meaning you don't consider the losses. Assessee is saying 80IA 5, anywhere it is saying that you have to stick only to the business income. You have to allow the deduction only to the extent of business income. No, it's nowhere saying. 80IA 5 is saying for the purpose of determining the quantum of deduction, consider that the eligible business is the only source of income. You don't have any other source. Consider for the moment that you have only eligible business. Do not set off any losses against that. So as per 80IA 5, my deduction is 90. Right? What is 80AB saying? 80AB is saying by computing the deduction against the eligible income, which is included in the gross total income. the eligible income alone shall be deemed to be the income. Again, 80AB assessee is saying, this is not Supreme Court observation at the moment. What we are discussing is the contentions of the assessee and revenue. 80AB assessee is saying that the again is talking about the computation of deduction. It's saying that you consider for the purpose of the computation of deduction, the eligible income is the only income. Again, as per which my deduction should be 90. But what revenue is saying? Revenue is saying 80IA5 and 80AB are meaning to say that the deduction shall only be allowed against the business income. So assessee is saying, no doubt, that the computation of deduction is only from the eligible business. But there is no restriction that the deduction shall only be restricted to the business income. If I have a deduction of 90, I can also claim it against the income from other sources if my GTI has that bandwidth. I cannot claim 90 entirely because 80A, not AB. 80A is saying the deduction has to be restricted to GTI. My GTI itself is 85. But what AO is trying to say, restricted to 70. What assessee is saying, give me 85. Because I've set off my losses, my business income has reduced down. But my deduction was 90. You restricted to 85, I don't have any problem. Right? Are we getting that? Is it clear till now? Any doubt till now? Yes. Yes or no? Have you understood the controversy? Yes, in case the income from other sources is 30 lakhs, in which case it will be 100. Then the assessee's claim would be 90 lakhs entirely, right? But have you understood the controversy, what assessee is saying? I'll write it down here for you. The assessee's claim is 85 lakhs, right? Because he's saying my 80IA is 90 lakhs. So restricted to 85 lakhs. Whereas AO is saying that 80IA should be 70 lakh restricted to PGP. So assessee is saying that 80AB and 80IA 5 provide for computation of income, computation of deduction, and do not restrict the deduction to PGB. Whereas AO is saying that 80IA5 and 80AB restrict deduction to PGB. Again, read the provision and tell me. You are the judge of Supreme Court. So, whose claim will you accept? Assessee or the revenue? Yes, I made you the judge of Supreme Court. I have presented you both the contention. Whose claim are you going to accept? Yes. Assessee claim for 85 lakhs. Assessee Charan, okay. So assessee's contention is more acceptable to you? Right? Okay. Let's see whether Supreme Court judges are in alignment with you, or we need to constitute a larger bench, right? So you know that, right? In case there is difference, then the larger bench or full bench needs to be constituted. Let's see. Okay. So the controversy you have understood that whether the deduction under ATIA has to be restricted to business income or it has to be allowed to the extent of the gross total income. So my entire controversy is around whether deduction under section ATIA, it is similarly applicable to all the profit link deduction, okay, has to be restricted to PGBP or the gross total income. This is your issue. So the Supreme Court judges looked at the ATIA and ATB. And it observed that the ATAB, why it was introduced? It was introduced for the deductions under the Chapter 6A in relation to the profit link deduction under Part C of Chapter 6A. And it provides that the ATAB provides that deduction has to be on the income of the eligible business and not on the total profits from the eligible business. On the net income of the eligible business and not on the total profits from the eligible business. So there was a CBDT circular when the ATAB provision was introduced, which provided the rationale for the introduction of ATAB. And it provided that the reason for introduction of ATAB was for the deduction under the Part C of Chapter 6A to be made on the net income of the eligible business and not on the total profits from the eligible business. So the Supreme Court observed that ATAB shows that the provision is pertaining to the determination of the quantum of the deductible income. So what the assessee is arguing that the ATAB talks about the quantum of the deductible income which is included as a part of my gross total income. ATAB is not curtailing the width of ATIA. So ATA stipulates that in computing the total income, you will be allowed deduction from the gross total income. And the deductions will not exceed my GTI. So ATAB, which is there, it provides for the determination of the deductions which are profit linked deduction, which is with respect to the net income and not the total profits from the eligible business. Because if you look at ATAB, what does it say? Where any deduction is to be allowed under Part C of the Chapter 6A in respect of the income which is eligible income, which is included in the GTI. Then for the purpose of computing the deduction, meaning ATAB is talking about the computation of deduction and not restricting the scope of ATIA. What does it say? In computing the deduction, the amount of the eligible income. The eligible income means what? As computed as per the provisions of the Act, meaning the net income and not the gross profits, shall be deemed to be the amount of income which is derived or received by the assessee. ATAB is nowhere saying that you restrict the deduction only to the PGBP. It is just talking about that the deduction has to be in relation to the net income, meaning the income computed considering all the provisions of the Act, all the allowances and disallowances. All that it says that. It does not go any beyond. Then the Supreme Court observed that in respect of ATIA. For claiming ATIA, the only condition is that the gross total income should include profits from the eligible business. 100% of the deduction will be allowed against those profits while computing the total income. The Supreme Court observed that the ATIA, the import of ATIA is that the total income is computed by taking into account the deduction against those eligible business profits. So what does it say that? That the deduction has to be computed, the total income has to be computed after allowing the deductions from the gross total income. While the revenue's contention is what? That the deduction has to be restricted only to the business income. Right? So the gross total income less the quantum of deduction under ATIA will give you the total income. Now the assessee is contending that income, the deduction has to be against all the heads, whether PGBP or IFOS or whatever, subject to the gross total income. It does not need to be restricted to the business income. So what the Supreme Court tried to say here, so Supreme Court said that for the purpose of calculating the deduction under ATIA 5, the revenue's contention is that ATIA 5 refers to the computation of the quantum of deduction being only limited to business income. Right? So that is the contention of the revenue, that the deduction ATIA 5 says that the deduction cannot exceed business income. On the other hand, assessee is saying that ATIA 5 is only determining the quantum of the deduction. Right? So ATIA 5 is not restricting to only business income, is not concerned with as to what you are restricting with. So therefore, the Supreme Court said that the amount of deduction under ATIA which is there is from the eligible business. And we need to consider for the purpose of ATIA 5 that this is the only source of income. And the question that arises is that with reference to allowing the deduction, the interpretation of revenue cannot be adopted. So Supreme Court said that for the purpose of calculating the deduction under ATIA, the loss which is sustained from the non-eligible undertaking cannot be taken into account, as ATIA 5 only contemplates that the profits from the eligible business alone shall be considered as the only source of income. ATIA says what? ATIA 5 says that it will be only considered that this eligible income profits, or sorry, this eligible business profits are the only source of income. So ATIA 5 deal with the computation of the deduction, whereas ATIA 1 deals with the deduction. ATIA 5 is a subsection which talks about what will be my deduction. So all that it says is that you don't need to account for losses. First compute deduction and then think about loss. So for the purpose of computation of profits, so for the purpose of computation of deduction under ATIA, the deduction need not be computed after setting off the losses. The deduction needs to be computed in respect of the profits from the eligible business as if it is the only source. Right? So therefore, the Supreme Court held that the scope of ATIA 5 is limited only to determine the quantum of deduction by treating the eligible business as the only source of income. And ATIA 5, as contended by revenue, that it is a limitation or it's a restriction only to business income cannot be accepted. So therefore, the Supreme Court allowed the assessee's appeal. And what does that mean? What does that mean at the end? That here my deduction would not be restricted to 70 lakh. My deduction will be 85 lakh. If my gross total income would have been 100 lakhs, then I would have got entire 90 lakhs as the deduction. Are we clear? So the Supreme Court said that Supreme Court ruling that ATIA 5 does not restrict the deduction only to business income. It provides for computation of deduction. It provides for computation of deduction that is considering eligible business income as the only source of income. Eligible business income as the only source of income, that is without considering losses from non-eligible undertaking. Therefore, ATIA 5 or ATAB does not restrict the deduction to business income. Deduction under section ATIA shall be allowed against gross total income. Are we clear? Yes, Janvi. Okay. Shall we take a small break of 10-15 minutes and then we get back? Okay, let's take a small break. All the notes are uploaded. You can, check online. All the notes are uploaded from my end. Already all the chapters of May 23. Okay. Now next particular section that we are going to deal in is again the profit linked deduction. But this is to do with the cooperative societies. Okay. So what is the section for cooperative society deduction? Yes, students. Yes, which is the section cooperative societies? All of you should be knowing this. 80 what? Where do you get deduction for cooperative society? 80? 80 what? Yes. Take your module alongside when you know you are sitting for these revision lectures now, because it will be really helpful. Yes, Geeta, very good. So ATP. ATP is the section where we are dealing with the cooperative society. Now, what does ATP says? ATP gives you the deduction for the income of the cooperative society. Right? ATP gives you deduction for the income of the cooperative societies. And what does it allow? Where the cooperative society's income is there, wherever it is there, then in computing the total income, the deduction is being allowed. And there are different kind of incomes against which the deduction is allowed for the different kind of cooperative society. Now, here where what we are concerned with, again, this is a ruling of Supreme Court. Now, this is a Supreme Court ruling. This can come as a part of problem pertaining to the cooperative society. Maybe, you can have a question on the computation of income of the cooperative society. Then I'll tell you what the problem will look like. Okay. So this is a Supreme Court ruling in Anna Sahib Patil. Anna Sahib Patil, Mathadi Kamgar, Sahakari Patpedi Limited. It's okay if you do not remember the name. Okay. Now, what was the issue before the Supreme Court? Now, this cooperative society, this Patpedi, do you understand what is a Patpedi? What is a Patpedi? As the name suggests, any of you understands what is Patpedi? Yes. What is a Patpedi? Do you know? Yes, no. So these are the kind of society which collects the funds from the members and then or then gives the lending to the members. So basically it's no Geeta, it's not HUF. HUF means the Hindu undivided family. Patpedi are different. Patpedi are basically the lending cooperative society which give the credit to their members by collecting the funds from their own members only. So as the name suggests, Patpedi. Now you will remember at least some name during the examination. Patpedi means that it's a credit society. So the question to the Supreme Court was that this is a cooperative credit society, which is giving the credit to the members. Whether it is allowed to claim the deduction under ATP. Now why this question is arising? Cooperative societies, you know that ATP, they can claim the deduction against the entire profits and gains which are attributable to the activities which are mentioned in ATP 2 subsection A, clause A. So ATP subsection 2 clause A provides the deduction against the entire profit and gains if the profit and gains are from the activities which is in the nature of the banking or providing credit facility to the members. So if there is a cooperative society engaged in carrying on the business of banking or providing the credit facilities to the member, the profits and gains from that entire activity are allowed as deduction under section ATP. But then There is another provision under 80P subsection 4. 80P subsection 4 provides that the provisions of 80P, the deduction under section 80P will not be allowed to the cooperative banks. So, what is the provision here? The 80P 2 clause 8 provides deduction against profits and gains attributable to the activity of banking or providing credit to members. Profit and gains of cooperative society. Whereas 80P 4 says 80P not applicable to cooperative banks. Now, the contention of the revenue in this case was that this Patpedi, which is providing credit facility to the members, is not a cooperative society but a cooperative bank. So therefore, it should not be allowed any deduction under section 80. So whether do you think the deduction under 80P should be allowed or not? What is your contention? Do you think the 80P should be denied or should the 80P be allowed? Yes. ATP should be denied or ATP should be allowed? Denied, Charan. Why? Why should we? Do you think it's a cooperative bank? Yes. Others? Geeta also thinks it should be denied because she also thinks it's a cooperative bank. Okay. Now, cooperative bank is defined under ATP. The explanation to ATP says that cooperative bank means the meaning of the bank under the Banking Regulation Act. Now, this Patpedi is not a bank as per the Banking Regulation Act, number one. So what did the Supreme Court said in this case? The Supreme Court said that merely because a cooperative society is giving the credit to its members, it cannot be said that it's a cooperative bank under the Banking Regulation Act. Banking activities are altogether different, and giving the credit to the members vis-a-vis operating as a bank, wherein you are giving the credit to the public at large. So both are different things. So just because a cooperative society is engaged in the giving the credit to the members does not mean it becomes the bank. And even if you look at the definition of the bank, what is a bank under the Banking Regulation Act? Do you know the Banking Regulation Act? You would have studied as a part of your law syllabus. What is the definition of bank? Yes. What is the definition of bank under the Banking Regulation Act? So under the Banking Regulation Act, what is a bank? Under that, the banking means the accepting for the purpose of lending or investment of deposits from the public at large. A banking company under the Banking Regulation Act means a company which transacts the business of banking. And what is a banking business? Banking means accepting for the purpose of lending or investment of deposits from the public. Here, it is a cooperative society which is undertaking the credit for the members. It is not accepting from the public or lending to the public. So it is not falling within the definition of the bank under the Banking Regulation Act. And explanation to ATP clearly says that bank means, a cooperative bank means the bank as per the Banking Regulation Act. So therefore, the Supreme Court in this particular case held that ATP 4 here will not be applicable. Yes, Janvi, I'll explain again. So here, the revenues contention was that ATP 4 should be applicable, meaning the ATP deduction should not be allowed because this cooperative society is giving credit to members. Therefore, it's a cooperative bank. So the Supreme Court said that just because it's a cooperative society giving credit to the members, it cannot be considered as bank. What does explanation to ATP says? Explanation to ATP defines cooperative bank, which means bank as per the Banking Regulation Act. Under the Banking Regulation Act, if you go, bank means which accepts the deposit from the public at large and lends the money to the public at large, which is not the case over here. So therefore, it cannot be considered as a bank. Are we clear? Yes, Sriram, correct. Okay, so just write it down. The issue was whether cooperative society lending credit to the members can be considered as cooperative bank. So Supreme Court ruling it was held that just because the cooperative society is engaged in giving credit to the members, it does not become cooperative bank. Banking is different from cooperative society as that involves lending money to public at large. Also, as per explanation to section ATP, cooperative bank means bank as per Banking Regulation Act. Banking Regulation Act, which is engaged in accepting money and lending money to public. So therefore, cooperative society lending credit to members does not fall in the definition of cooperative bank. Are we clear? Yes or no? Yes? Done? Okay. Let's move to the next case. Again, that pertains to the deduction under section 10AA. What is 10AA? What is 10AA? Yes. What is 10AA? Yes. Past. Yes, students. What is 10AA? Yes, Geeta. But what is exactly this particular deduction under 10AA which is allowed? Yes, faster. Yes, Chanvi, correct. So this is 10AA which is there is basically for the SEZ unit which manufactures and or provides any services basically for the purpose of exporting outside India. So this is to the SEZ unit, but this is more in relation with the export of the goods or the services. Export of the goods or the services. So 10AA is basically for that. Now, one of the questions which arises usually in the context of 10AA, do you know how 10AA is computed? How 10AA is computed? First tell me that. How do you compute the 10AA exemption? Yes. What is the formula for the 10AA exemption or deduction? What is the qualifying amount? Yes. Yes, Viraj, correct. But what is the formula? Yes. How do you compute the 10AA? What is the formula? Faster. You all have done that, isn't it? Yes, correct. So exemption, yes, Janvi, 100%, and it permits the taxpayer, okay, Viraj. Export turnover upon total turnover into profit of SEZ. Yes, Janvi, correct. 100% or 50%, that's correct. So, yes, Geeta, export sale upon total sales into export, that's correct answer. So, the 10AA which is there is given as a deduction for the 15 years period, right? Now, how does this 10AA is basically this export turnover and the profit which is there, where the major controversy which arises. So see, what do we have to do is profit into export turnover upon total turnover. 10AA is for the SEZ unit, deduction for the exports. Right? So my deduction amount is profits into export turnover divided by the total turnover. Right? Now, 10AA which is there is basically deduction to the assessee who derives the profit from the export of the article or thing. But what is the meaning of the export turnover? So it means the consideration received in India or brought into India in respect of the export. So consideration in respect of the export. So it does not include the freight charges, telecommunication charges, insurance charges, which are attributable to the delivery of goods outside India. Or for that matter, any expenses on the foreign exchange. So what it does not include is freight, telecommunication, insurance, or the foreign exchange charges. Right? So as per explanation 1 to section 10AA, clause 1, export turnover means the consideration in respect of the export. But it does not include the freight, telecommunication, insurance, or the foreign exchange expenses. Right? So now in this context, there is this again the ruling of the Supreme Court. And what was the issue before the Supreme Court? So Supreme Court ruling in Cognizant Technology Solution. What is the issue before the Supreme Court? Whether the deduction under 10AA is available in respect of foreign exchange gain. So issue was whether deduction is available in respect of foreign exchange gain, which is solely relating to the export business. Solely relating to the export business. Yes. Tell me all judges. Yes. All the judges, yes, tell me. Whether will you get the deduction on the export turnover as well? Sorry, on the foreign exchange gain as well, which is in relation to the exports. Yes. Yes, Janvi, it is not to be included. Others, what do you think? Geeta, yes, you think it will be included. So do we need to constitute a larger bench? Because there are difference of opinion among all the judges. No? Okay, let's see what the Supreme Court has to say. Whether it is to be claimed or not. So, Supreme Court observed that what needs to be seen, whether the benefit which is earned, the gain which is earned on foreign exchange, was it in relation to the, or was it by virtue of the export made by the SSE? So the exchange gain or loss is not in the hands of assessee. The assessee does not determine the exchange value, the foreign exchange. The assessee is exporting. The assessee is only exporting. So then the fluctuation in the foreign exchange is in relation to the export business. Though the assessee is unable to determine the exchange gain or loss, whether there will be loss, whether there will be gain, it's not in the hands of assessee. But why this particular gain is being earned? Because the assessee was exporting. So this is not an independent income, the gain or loss. This is in relation to the export business. The higher value, the gain was earned because of by virtue of the exports made. So the deduction would be available in respect of the foreign exchange gains also. So just write down. Since the assessee was in export business, the deduction under section 10A, since the assessee was in the export business, the foreign exchange rate, the foreign exchange gain which is earned was relatable to the export business. Right? Therefore, the deduction under section 10A would be allowed. Deduction under section 10AA be allowed in respect of foreign exchange gain. Now see, the earlier question of ATP or this question of 10AA, how it can come. You may have a comprehensive problem in relation to the SEZ unit, wherein you would be having this particular foreign exchange gain information. So then that will be an adjustment. So you will have to write that yes, 10AA will be available in respect of foreign exchange gain also. So that will be a part of the comprehensive problem. Similarly, there could be a question on cooperative credit society where you will have to compute the ATP deduction. So there could be one adjustment that the AO is contending that this is not a cooperative society, this is a cooperative bank. There you will have to quote this particular Patperi case law. So this could be part of the entire comprehensive question. Are we clear till now? Yes or no? So this ends your PGBP case laws. Any doubt till now? Any question before we move on further? Yes? Are we clear with all the cases? So are you understanding how do we approach the case law? You don't need to just, rectify the case laws. Okay, this is saying this. You have to understand the background behind that, right? You have to understand. Once you understand the background, will you remember in exam? Very easily. Because now you know the background. You don't need to remember, okay, this was said in that case, what was said in this case. No, you don't need to remember all of that. What you need to understand is the basics. Go to the bottom root approach, why the particular litigation is arising. Once you understand the provision, automatically you will remember the cases. Clear? Okay, perfect. So let's move further. Now I'm moving to your favorite provision, which is the favorite chapter. I've said favorite sarcastically because not many people like trust taxation. Isn't it your favorite or is it sarcastic? Yes. Trust taxation. Yes. At least I never used to like it. Okay. Kaushiki, foreign exchange expenses is not included as a part of export turnover. Yes, a very good argument to take. But then, they have allowed the gain on the basis that this is in relation to the export business, and therefore even on the gain, the 10AA deduction is allowed. But of course, this argument was not taken probably in the judgment, but definitely this argument should be taken. And even when I was reading it, I had it in mind that why the foreign exchange expense is not allowed, but the gain is allowed. Yes. Janvi, salary and house property, it's very minimal marks. It can come as a part of the, again, adjustment to the comprehensive income, like Chennai property case or Raila case, all of that could come. Again, salary as a part of the, international tax computation sum. Maybe at that front, some salary problem could be there, some salary adjustment could be there. Okay. So now we move towards the trust taxation. Okay. Now, what is this trust taxation provision in relation to 1023C? What is 1023C? The first case that we are going to look at. What are the two regimes of trust? What are the two regimes of trust? Under which two provision you get the exemption for the trust? Yes. Which two provision? One is 1023C, I have already written. Which is the other provision? Open your module and tell me. Those who have sat with me in May 23 batch, you should be able to remember all of this. I will not exempt you at least. And in the next class, if you come unprepared, I'm not, letting you then answer only. Or not taking your answers basically. Yes, Geeta. First regime is for the hospital education. Second regime is for the trust and charitable and religious trust. Both are trust, but it's charitable and religious trust. What is the provision? What is the section? Yes, fast. What is the section? Yes. So there are two kinds of trust first, the public trust and the private trust. Both have the different taxability. For the charitable, for the public trust, there are two regimes. For the public trust, there are two regimes. One is in section 1023C and another is in section 11 to section 13. Okay, one is in section 1023C and another is in section 11 to section 13. So there are basically two regimes. The first one, 1023C, we'll call it as first regime, and 11 to 13, we'll call it as second regime. Under 1023C, what is covered? The specific trust, under 1023C, some specific trusts are covered. What are the specific trusts which are covered under 1023C? So, there are certain religious trust or there are certain specific trusts which are there, which are covered as a part of 1023C, which are there. Other than that, there are certain, what religious purposes trust, which are basically there as a part of 1023C. So all those trusts, like, there are Prime Minister National Relief Fund or the Prime Minister's Fund, Prime Minister Aid Fund, all those Swachh Bharat Kosh, all those trusts are there. Secondly, as I said, the second kind of trust under 1023C, which is covered, is the educational or medical. The educational or medical trust which are substantially financed by the government. The educational or medical trust, educational or medical trust which are substantially financed by the government. Okay. And then we have under the 1023C, the third kind of trust which is there is the universities or the educational institution solely for the educational purpose, or medical institution or hospital where their receipts do not exceed rupees 5 crores. So which are the trusts which are covered? The educational institution solely existing for the educational purpose. Educational institution solely existing for educational purposes, where the gross receipts are less than 5 crore, or medical institutions where gross receipts are less than 5 crore. Okay, so educational institutions which are existing solely for the educational purpose, where their gross receipts are less than 5 crore, or medical institution or the hospital where their gross receipts are less than 5 crore, or hospital. Are we getting that? Then we have the general fund or institutions which are established for the charitable purposes, or the trust which are wholly for the charitable or religious purposes. Okay, or any educational institution solely for educational purpose, or the hospital. So then we have the last category under 1023C is the general. So first is specific trust. They do not require any registration. Secondly, educational or medical trust which are substantially financed by government, and where the educational or medical institutions are there where their gross receipts are less than 5 crore. And then any other fund or institution which is established either for the charitable purpose, charitable trust, institution only for religious purpose, or religious and charitable purpose. Then the third is educational institution solely for educational purpose, medical institutions and hospital. Now these are educational institution and medical institutions which are put in the fourth category. So this is your category A, B, C and D. So you will ask, ma'am, what is the difference between C and D? The educational institutions mentioned in C or the hospital mentioned in C versus in D. So the C ones which are there are having the receipts less than 5 crore. They do not need to obtain any registration. But the D ones have the receipts more than 5 crore. Therefore, they need to obtain the approval from the PCIT or the Commissioner of Income Tax. And now the important point which is here, where we are going to focus for our case law, is on this educational institution solely for the educational purpose. Now, this is the case of the Supreme Court. In the case of Noble Educational Society, Supreme Court ruling in New Noble Educational Society. Now, what was the issue before the Supreme Court? The issue before the Supreme Court in this case was that does the requirement under section 1023C to solely engage itself in education, would it mean that these institutions cannot have any other income? So what do we understand by the term solely engage itself in education? So if I have, let's say, the additional income, will I not get the exemption? What does need to be done in that case? So under section 1023C, as I said, income of the university or educational institution existing solely for the educational purposes, only then the income of that institution would be exempt. Right? So as per the 7th proviso to section 1023C, it provides that the exemption under 1023C would not be applicable in relation to the income of educational institution unless, in the case where there is profits and gains from the business. Unless the business is incidental to the attainment of the objective and separate books of accounts are maintained in respect of such business. So, the 7th proviso to section 1023C provides that no exemption under section 1023C to educational institution having profits and gains of business. Having business profits. The exception is profits are incidental to the attainment of objectives, and separate books of accounts are maintained. Now, what was the issue here? The issue here was very simple, that whether the educational institutions cannot have objects not related to the education. Cannot have objects not related to the education. And can it claim exemption on business profits. What do you think? Yes. Yes. What do you think? May 23, we have already done that. For you, this particular case is already done. Yes. Yes. Yes, Kaushiki, correct. Profit from selling of books is allowed as deduction. But then what is not allowed as deduction over here? Okay. Yes, Geeta, correct. Okay. Let's discuss about this. So, understand one thing. This noble case which was there. Okay. Here, the question before the Supreme Court is what? That whether I can have the additional profit also. Right? Whether I can have the additional profits also as an educational institution, and whether can I claim the deduction or sorry, the exemption against those profit. So let's say, for example, I'm running my coaching institute. It's an educational institution. So can I claim 1023C? Can I claim 1023C? I'm running a private coaching center. Can I claim 1023C? Yes, I can claim. There is no bar on having the profits. As far as you are reinvesting for the purpose of that particular activity. The bar is on having the profits lying idle. If you're reinvesting for the educational activity, there is no problem in allowing you the exemption. Right? So 1023C, which is there, the Supreme Court here observed that the requirement of the charitable institution or the trust to solely engage itself in the educational or the charitable in the educational activities and not engage in any activity of the profit means what? Means that the institution cannot have the objects which are unrelated to the education. The objects of the institution should be to impart education and nothing else. So the assessee was trying to say that okay, let's take an example. I am an educational institution. My main activity is educational institution, but whenever my coaching center is free, I give it on rent to the public. You can come and take some webinars, take some seminars, conferences. Like I have a huge premise line, and on Sundays I do not conduct any classes. So what I do is I give my premises to the corporates to take it for their seminars, to take it for their workshops. So that is something. Whether in that case also can you claim the exemption under 1023C? So if I'm running a coaching center, you are saying that, okay, we can claim the exemption. Janvi, why for private coaching center? Word solely does not mean the word predominantly. Solely is different from predominant. Even if my predominant activity is doing the educational initiative, but I am doing the business alongside, which is not related to the educational, like renting out my premises for the workshops, then I will not get exemption under 1023C. Are we getting that? So the Supreme Court here observed that the solely, the term solely is not same as mainly or predominantly. The term solely is not same as predominantly. The requirement of the institution is to engage solely in educational or educational activities. The requirement of institution is to engage solely in educational activities and not engage in activity of profit unrelated to education. Activity of profit unrelated to the education. Where the object of the institution appears to be profit oriented, such institutions would not be entitled to 1023C. Now, as I said, private institution, private coaching can also claim 1023C, provided it uses the profit again for the educational purpose. It is not taking home the profits back. That is not allowed. If you are, doing it for private gains, no, that's not allowed. You cannot take back the profits. You are doing something charitable. So, where the surplus accrues, there is no problem from having the surplus. Even the schools which are running, they are also working for the profit only, so that if they earn profit, they could reinvest for the infra development of school, for the teachers, how otherwise they will pay. So having the surplus is not a bar, provided the surplus is generated in the course of providing the educational activity. Right? So having the surplus is not bar, provided that the surplus is generated in the course of providing educational activity. Right? Where the objective is profit oriented, that institution would not be entitled to 1023C. Institutions having profit oriented objective would not be entitled to 1023C. Are we clear? So having the incidental profits which are generated incidentally, as seventh proviso also allows it, The seventh proviso has an explanation, has an exception, which says that if there are incidental profit earned by these institutions, there is no problem with that. And if the separate books of accounts are maintained. Now, what do we understand by the incidental profit? Incidental profit, let's say there are profits from the sale of textbooks, providing the school bus facilities, providing the hostel facilities. But let's say, for example, as I said, where my school premises are rented out for conducting seminars or workshops to outsiders, then it cannot be said that the income is incidental to the imparting of education. So if there are incidental business profits and separate books are maintained, there is no problem. The problem arises where the profits are not incidental. If there are incidental business profits, like example, sale of textbooks or school buses operation, and separate books of accounts are maintained, exemption will be available. Okay. Are we clear? Yes or no? Any doubt? Okay. Yes. Any doubt? Any question? Fine. Okay. Now let's move towards the second category of section 11 to section 13. So this is the first regime. Let's move to the second regime. This is again for the charitable or religious trust. Now here, for the charitable or religious trust, we'll focus on the charitable. What is a charitable activity? Where is it defined? What is a charitable activity? Yes. What is a charitable purpose? What is a charitable purpose? Yes, where is it defined? Fast. Yes, students. Where is it defined? Next time you have to come thoroughly revised, okay, for the class. And we have done that. May 23 students, we have entirely done this. Both of these judgments, what I'm going to talk about. Okay, let me talk about what is a charitable. Section 2, subsection 15. Section 2, subsection 15 talks about the charitable activity, isn't it? What does 215 define? How does 215 define the charitable purpose? Yes, I gave you the section number. Section 2, subsection 15 defines the charitable purpose. Let's try and understand. Charitable activity is defined under section 2, subsection 15. So 215 says that what is the meaning of the charitable purpose? It says charitable purpose includes relief of poor, education, then yoga, medical relief, preservation of environment, or monuments, and finally advancement of any other object of general public utility. Advancement of any other object of general public utility. There is a proviso to section 2, subsection 15. What does the proviso says? The proviso says that the advancement of any other object of general public utility shall not be a charitable purpose if it involves not a charitable purpose. This is an exception. Proviso always means an exception, right? Not a charitable purpose if it involves what? Carrying of any activity. Carrying of any activity in the nature of trade, commerce, or business. Trade, commerce, or business, or any activity of rendering any service in relation to trade, commerce, or business. Right? Then there is an exception to the exception. Exception to this, meaning it says that the proviso says that if there is an activity in the nature of trade, commerce, or business, that will not be considered as the object of general public utility. But any business activity, any trade, commerce, or business will not be considered or will not fit into this proviso and will be considered as the advancement of the object of general public utility if the income from the activity, if the activity is undertaken, if such business activity is undertaken in the course of carrying out, of such advancement of any other object of general public utility. Carrying out of such advancement of any other object of general public utility and the receipts, aggregate receipts from the activity aggregate receipts from the activity do not exceed 20% of the total receipts. Total receipts of that trust. So what does it mean? Simple meaning is that advancement of the any other object of general public utility is a charitable purpose. But this shall not be considered as a charitable purpose if it involves carrying out of the any activity in the nature of trade, commerce or business. Irrespective, even if the proceeds from those business activity are reinvested. Even if the proceeds from the activity are reinvested or retained. Irrespective of the application, you can write it over here. Sorry. Irrespective of the application or retention. Sorry, not here. Irrespective of the application or retention. So as I said, like private coaching class, in that case, if it is claiming exemption under 11, irrespective of it is applying or retaining the money or applying for charitable purpose, it doesn't make sense. If it is doing in the nature of trade, commerce or business, it will be not allowed, that it will not be considered as charitable activity. However, if the activity is undertaken in the course of carrying out any other activity which is in the advancement of the object of general public utility, and the receipts of that particular business activity are less than 20% of the total receipts, then it will not be considered as doing the business. Then it will still fall under the charitable purpose. So this is your exemption. This is the exception to the exception. Are we clear till now? Now, what was the Supreme Court ruling? The issue in the Supreme Court ruling. This is in the case of Ahmedabad. So both are very important ruling, Noble as well as Ahmedabad Urban Development Authority. Ahmedabad Urban Development Authority. And both are latest ruling. The issue before the Supreme Court was when can an activity be considered as trade, commerce or business? When an activity be considered as, what is trade, commerce or business? It's not very clear, right? So what is trade, commerce or business? This is a very, very important ruling of Supreme Court running into 159 pages and dissecting very diligently the entire charitable trust provision. Very important ruling. So what does the Supreme Court in this case had held that? Supreme Court in this particular case had interpreted section 2 subsection 15 and has gone into the entire legislative history of the charitable trust provision. So Supreme Court has observed that the prohibition is applicable to the trust which are engaged in the nature of trade, commerce or business, irrespective of the nature of trade commerce or irrespective of the nature of use, application, retention of the income from the activity. So what is here important here is, here the Supreme Court has interpreted through the parliamentary amendments which have gone into the 215, that 215 imposes a bar on the trust from carrying on the activities in the nature of trade, commerce or business. So in 2008, between 2008 and 2012 and 2015, the amendments were introduced in the Act to prohibit the trust from engaging in the business activities, which shows that these trusts should only operate for the charitable purposes. So there is a bar in engaging in trade, commerce or business, because there's an express prohibition on that particular thing. So the trust should not be motivated by the profit. The trust should not be motivated by the profit motive. So if let's say for example, the fees are collected and the amounts are collected as a mandate by, let's say, some state department, that cannot be treated as trade or business. If there is any regulatory activity which is undertaken, which necessitates the collection of fees, there is no problem in that. If, let's say, for example, ICI, it collects the fees, it is an educational institute. It is for the purpose of regulation of the profession. It is not business or commercial in nature. Likewise, statutory authorities which are there, who are under the mandate to develop this MARDA is there, housing development, industrial development authorities which are there, they might also collect certain charges, but that cannot be said to be engaging in business, because these bodies are set up under the specific laws. They are not to provide some commercial or business service. So if the fee is collected to provide an essential service in larger public interest, that would not be considered as trade, commerce or business. Or even there are trade bodies which are to facilitate the activities or facilitate the kind of business or the industry. Again, those may not be charitable, because those are not doing under some statute, right? So what is intended by the Parliament under 215 is that there has to be a general public utility charity. It cannot engage in any activity of the trade, commerce or business. Very simple. The trust cannot carry out any business activity because it is for the purpose of the charity. It is established for the purpose of the charity. So therefore, in this case, the Supreme Court observed that. The Supreme Court clearly observed that the first consideration would be whether the activity concerned is covered by the object clause. Whether the activity is covered by the object clause. Thereafter, if the accounts disclose whether there is a nominal profit or whether there is a higher markup on providing the services. If there is a nominal markup, then one can say that this is the activity of advancing the general public good. However, if there is a significant markup over the actual cost of service, then you need to see whether it fits within that particular proviso of 20% of the total receipts. If there is a nominal markup, it straight away falls in the advancement of general public utility. So, when the trust is actually carrying on the activity in the course of achieving one of its objects, then it can be said to be a charitable purpose. So you can write down, the test is to see whether nominal markup is charged or higher markup is charged. If it's a nominal markup, then this could be for the advancement of object of general public utility. In this case, the threshold of 20% needs to be seen. Okay. So carrying out activity in the nature of trade, commerce, or business should be conducted in the course of achieving the object of general public utility. And the profits or gains must be incidental. So, if the trade, commerce, or business is incidental to objectives, is incidental to the objective, and separate books of accounts are maintained like we had for educational institution, then it can be charitable activity. And it can be considered as charitable activity. Are we clear? Okay. Yes or no? Any doubt? Any question? Any doubt? Yes or no? Yes or no? Yes. Yes, yes or no? Are we clear? So will you revise before the next class? Okay. Okay. 215 will not apply Kaushiki to the charitable trust. Sorry, 215 will not apply to the 1023C charitable trust. It will only apply to section 11 to section 13. Clear, Kaushiki? Janvi, is it clear or not? I didn't get your answer. It's not clear. Yes, in the next class, we'll cover few another case laws. There are 4-5 small case laws which are pending. But yes, we'll do the PGBP question. So you have to revise the PGBP. Are we clear? Thank you, Geeta. Viraj, as I said at the start of the class, you have to revise PGBP before the next class. Okay, perfect, Janvi. So thank you so much. Good night and see you in the next class. I hope you will revise PGBP very thoroughly because I'm going to give you some intense questions. I do not want you to just sit and watch the lecture, but solve the questions. So take this opportunity because this is going to be very intensive class. Okay. So thank you so much. See you in the next class. Yeah.